We are back at it again here with another video with Invest for Tomorrow. To all the first time viewers and investors, welcome to the channel. To all subscribers, welcome back. All I ask from returns for this, smash that like button, tell me you watch this video. Helps out the YouTube channel and lets me know you appreciate the time and effort I put into making these videos. So here we are with the S&P 500 index pulling downwards, and the big question is, are we in a market crash or correction? I'm going to share the key levels I'm watching. What is it that I'm going to be watching for to navigate through this volatility? But before I do, I want to share with you guys the home run opportunity I mentioned this morning over at the Discord. And if you want to get on early with us, every single morning we strive for opportunities like these. A normal day is 10 to 20%. A great day and a home run is 20% plus. Join us because we strive for them every single day. The link is down below in the description to the Discord, and we look forward to having you join us. And we're going to jump right into it here with the S&P 500 index and the overall market. So the home run of the day was spectacular and beyond expectations. And if you want to get on early with us every single morning, we strive for opportunities like these. Check out the link down below in the description to the Discord. And by joining, you'll become part of a growing community of investors, all looking to learn and grow together. So these are the stocks I mentioned this morning. Every single one of them gave 5 to 10%, 10 to 15%, but the highest one was DATS. And we caught this one in the pre-market as it was pulling downwards. It was under a bear indicator, and if it started to reverse with strength, it was looking like an opportunity. When I mentioned it, it was at 334, sat sideways towards the bell, got that bull indicator, full strength through the volatility to a highest point of 25% plus, came back down, gave small jumps of 5 to 15%, and also reached another 15 to 20% jump in a matter of minutes towards the middle and the end of the day, guys, presenting two opportunities of highest points of 25% plus. If you want to get on early with us every single day, check out the link down below in the description to the Discord. We strive for opportunities like these every single day, and we look forward to having you join us. Let's jump into these charts. So here we are with the S&P 500 index, and as we zoom out, you could see things are pulling back from these highs up here of 4,800. We're down to 4,400. That is nearly a 10% correction so far. So are we in a crash? Not yet. Are we in a correction? Yes, we are. Crash would be closer to, I would consider 18% all the way through 20% plus. Now, 20% plus is really the definition of a crash based off the stock market, but really close to it, 18, 17%. It's getting really close to the edge. So I would consider that as close to a crash and possibility of the higher risk of going into crash territory. Right now, we're just in correction territory. And as you could see it, there's been moments of pullbacks, tries to jump back up, pulls back down, tries to jump back up, pulls back down, and you just see it keep on happening. But the bigger picture is to the downside, and I believe a lot of bull traps are being formed. Now, let me pull up Ultimate 42 Vision. By the way, you can now gain access to it as well, where you could see the weakness in the charts, which is extreme weakness, white with red borders, and the complete transitions and shifts into strength from white with red borders to red with green borders, dark green, and green. And then on the way back down, when shift is going into weakness, it will transition from green with red borders, dark green with red borders, into red and back into extreme weakness. And you could see the dips and the rips. And in between that, as well as an extra layer of confirmation, you'll be able to see the bull indicators and bear indicators from Ultimate 42 Vision. The link is down below in the description to the 42 Vision indicators. And by joining, you'll gain access to the daily watch list, weekly watch list, and a community of investors all looking to learn and grow together and receive the clarity you deserve within the volatility of the markets to maximize on opportunities no matter what direction the stocks are going, right? Or the S&P 500 index or whatever it is you are charting. So this has been under a bear indicator since today, right? And it showed up at 1 p.m. on the 5-minute. Let me show you guys here. And you could see it. That's the latest indication, and we got that popping up. We got that on our SpyBot notification over at the Discord, and it sent it at around 1 p.m. and then it just continued to pull downward since. But on the 30-minute, this has been under a bear indicator since the 20th, right? And you can see it here. It all started today. So the 5-minute, the 30-minute, are in conjunction with each other. Now, when we go ahead and zoom out, you could see that it tried bringing itself back up, and you could see the white with red borders shifting back into green, but quickly got destroyed. But the last bear indicator popped up on the 13th, and it lasted all the way until the 20th. And the 20th bull indicator this morning was very short-lived. And that's why I'm saying there's a lot of bull traps popping up, guys. Bull traps after bull traps. Every single bull indicator has been weak. Now, the most recent one that was the strongest was back in the Santa rally, right? On the 20th and 21st, all the way towards the next bear indicator of the 30th of December. And since then, things have been pretty rocky. And you could see clearly here how long these bear indicators have been lasting. They've been lasting for several days back to back. And that's what I want investors to realize. Through this 10% correction, with Ultimate 42 Vision, things are clear and you can navigate through what's going on. So let's look at some articles and statements of resistance levels, support levels, and how bad could this get if we're already in 10% territory. And will we go to 20%? That's the big question, and that's what we're going to break down in today's video, because when you zoom out here, right, we have the 30-minute pulled up. Things are more volatile, but the 4-hour has been telling us back to back, way back here at 4,700 to the lows here of 4,500 under bearishness. Try to come back up. That bull indicator only lasted 2 days, and it went from 46 back to 47.52. And then we have another bear indicator here from 46.50, and we hit low so far of 44.78. Now, we have touched 2 times now extreme weakness on the 4-hour, and it tends to have a reversal after that. So that's what I'm watching here. Are we going to have extreme weakness back to back, or is it going to try to reverse again? But keep in mind as an investor that 10% is just a correction, and this is actually in the state of a possible crash or getting really close to it, like 15% based off analysis ratings and different articles that we're going to look at here. So if it tries to reverse and come back up, that's going to be another bull trap, perhaps, if it's true what these articles and everything is showing. I look forward to seeing your thoughts down below. Please comment down below what you think about the S&P 500 index as well. So here we have it, okay? We have here the whole entire stock market crash, 20% downside in 22. Is it possible? Now, the whole thing, it comes down to interest rates. Before there was 3 to 4 hikes stated as speculation, and now it's going all the way up towards 5 to 7 hikes. And some people are saying 0.25. Others are saying it could be 0.50 basis points, and that's double, and that's faster, and that's bigger. So we need to see how the Federal Reserve is going to go ahead and respond in the next few meetings. Now, here we have the bull case, 20% probability based off the article, base case, 70% probability based off the article, and bear case, 10% probability. And I'm going to share my own thoughts based off of what they're saying, and these are the numbers to remember. For the bull case scenario, 5,500, base case 4,800, and bear case is 3,600. And I'm going to share with you guys my thoughts based off the charts. Now, when you come over here, it states here, does S&P 500 index test a lower range as major banks dip on earnings and high rates squash tech? Okay, these two things combined have been hurting the market. That's why we had the pullbacks we've been having this week, because the earnings reports have not been as exciting or as expected. And a lot of CEOs are coming up in these meetings and being very honest. They're not really sugarcoating anything or bringing hope. They're stating, hey, this is what it is. This is what the outlook looks like. And the stock market prices it in. And that's what we're seeing based off the S&P 500 index reactions and also individual stocks. Then you have rates in the back of everybody's mind, and it's crushing tech, okay? High rates. Now, we have others that are coming in and stating that the S&P 500 index will crash 50% after the 4th U.S. super bubble in the past century pops. Now, these are some very bearish statements, and they're stating that we've had 3 big bubbles, 1929, 2000, and 2008, and if he's correct, I'm not sure if the bubble's now, but it could come someday in the future, okay? And that is something that is unavoidable. And it could be because of a big tech sell-off or just a big bubble in general of certain assets. But I don't see us in a situation where it's going to play out like any of these years right here. And if it does, it could be between 20% to 50%, and it's not going to happen at once. It's going to take time. So if he's right, maybe he's having a projection it's going to happen in the next 2 years or throughout the next 2 years. But these type of articles, it's not that I plan to ignore them. You have to be aware of them, but sometimes too much fear is over-exaggerated, and these are possibilities that can happen. But we just went through a huge crash in 2020, and we're about to get out of the second year of it, and we recovered from it. It happened way back, all the way down here, okay, from 3,300 to 2,100. Okay, that was almost 50%. Nobody talks about that, but that was like a 30 to 40% drop. So if it happens, it's possible. I'm not going to take it off the table, but I just don't see that right now. We just need to see how things play out and how much of this is just fear and how much of this is reality, right? But apart from earnings bringing stocks down in the S&P 500 index, what's another thing to watch? Well, I'm watching the US 10-year Treasury, okay? Super important to realize this. The US 10-year Treasury keeps going higher. Since the beginning of the year, it was at 1.5. It's at 1.83. Slightly dropped today to 1.77. Some people see this going all the way up towards 2 and even higher. And the higher this goes, the bigger the pressure on the S&P 500 index and specifically on the NASDAQ. I mean, look at this NASDAQ. Just down. A lot of people are stating this is going to go down unavoidably 20%. And if you look at its highs to where it's at now, it's almost down 10% plus, okay? The highs are way up here, okay? We're almost at 10 to 15%. And look at the volatility, those spikes up and down. I mean, it's going to be super important to be able to have the clarity within the volatility to maximize on the trades between, when things are shifting from weakness back into strength, and then also that extra layer of confirmation of a bull indicator to a bear indicator. That's what I'm going to be tracking. I'm going to continue to track here the 10-year Treasury. I am not going to, completely eradicate this type of fear, but this is just something to have in the back of one's mind and not be surprised if it happens. I just don't see it. Maybe a 10 to 20% correction, maybe slightly a 20% to 25% crash is possible right now. And the certain market conditions that we're in, I just don't see this happening. I mean, if things change, we would have to reanalyze and re-update. But just that's my opinion, not financial advice. And I could be completely wrong. Who knows, right? And then we have here the different case scenarios. So let's go over to the chart and let's look at the S&P 500 index again based off the base case. The base case just means that we pull back and then all of a sudden we break even, right? We come back up to 4,800 or get a little bit shy off of that to the upside or downside, but that eventually this reverses and it goes back up to a break-even situation, okay? That's the base case. The bear case is actually 20% more from where we're at right now. And we're already down like 10 to 15%. We're in that area. And that would be all the way down here to continue pulling back another 5. And then all the way down here for another 10. And then 36 is way down here. I mean, like if you really draw a line here and you just draw a line and come back down here, that's a big fall, guys. So we have here another 5%, which would be about a 15 to 17% decline. Then we have here the base case scenario of a 20% correction, right? And then, well, if it breaks through 20% or reaches it, it's actually a crash. But correction in the sense that it could hopefully bounce back up. And if it breaks through it, all of this is crash territory. So down here, though, it's like 30% from the highs. That's huge. That's a big correction / crash / reversal point to the downside. Very bearish. What am I looking at? Well, The first support level has been broken through, okay? And that was right here at 4,500. The second one that I'm watching is 4,200. And then obviously 4,000 is the main one I'm watching to decide if this is going to be a correction and bounce back up from there, or if it's going to break through it and turn into a crash. I look forward to seeing your thoughts down below. I'm going to be using 42 Vision to navigate through the volatility of the markets, maximize on opportunities, and we have our SPY bot now. That's been our latest upgrade, and it's notifying us right there in the Discord when things are moving up or down. If you have 42 Vision, if you join the 42 Vision tier level, so that you can follow it and guide yourself within the charts and what it's sending based off the SPY's action. An overall picture of the possible direction based off the 5-minute like it did today. It sent us a bull indicator in the morning. Things were pretty strong until almost 11 a.m. Things started to consolidate, got a bear indicator, and it was bearish the rest of the day. And if you look at the previous ones, you could see many different days have been tradable, and these call and put options are literally going up 5x to 10x in a matter of just minutes to hours. Today, they literally went up 500%, 5x from the moment it was sent all the way down to the bottom. And this is something you can become part of as well. Check out the 42 Vision indicator link down below in the description. By joining the 42 Vision tier level, you'll gain access to the daily watch list, weekly watch list, and a community of investors all looking to learn and grow together, and the premium indicators to navigate through the volatility of the markets with confidence to maximize on opportunities. As always, guys, thank you guys so much for watching, and let's make some money.